The global sell-off intensifying this morning, led largely by tech. Want to bring in Dan Ives, Managing Director at Wedbush Securities. We're looking at the NASDAQ now off about 856 points. Of course, Apple, Nvidia, some of the big laggards. Dan, what do you make of the sell-off? It's a falling knife at the moment. Do you want to catch the knife?
Yeah, I mean, look, for us, we're navigating investors to this white-knuckle moment in terms of looking at the tech names and the winners, what I believe is going to be this AI revolution. Look, there's no doubt that investors over the weekend and today calling, trying to say, is this the end? Is this the end of the tech bull market? I don't believe it is. I believe this is just a massive fear panic that will create the opportunities for Nvidia, to own Apple, Microsoft, Amazon, Alphabet. And that's always been our playbook the last 24 years covering tech.
In a world where artificial intelligence is the talk of the town, there's an intriguing plot twist unfolding in the stock market that is turning heads just as fast as Elon Musk's tweets. The proverbial smart money is betting heavily against one of the tech darlings of this era, Nvidia. While the analysts are vociferously advocating for Nvidia, raising its portfolios like a trophy, the market is showcasing its enigmatic but inevitable nature. And in this high-stakes drama, even Goldman Sachs has cast a shadow over the AI frenzy that has been driving Nvidia's stock performance. With institutional investors placing calculated bearish bets on Nvidia, one has to wonder, is it time to follow the smart money or seize an eventually green pasture for Nvidia's stock? Stick around as we unravel the mystery behind the bearish sentiments and how it could shape your investment strategy. But first, if you want to keep up with Nvidia's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. Now, back to today's video.
Dan, this is, the earnings that we saw, sometimes people nitpick, but in general, pretty good for the Mag 7 across the board. So what we're seeing now is probably just some air coming out of the enthusiasm, maybe some multiple contracts a little. What happens if it's a negative feedback loop and actually things start softening up and you actually do get, not just the multiple side of things, but the earnings side of things? Isn't that, we're down 10% already in the NASDAQ. Where could that bottom?
Yeah, like the self-fulfilling prophecy. I think the worries there right now unfounded, right? In terms of not just what we saw from earnings, but in terms of what I see, here in Asia, in terms of our checks demand going into the rest of the year and into 2025. Look, that will be sort of a ghost that I think the street will be battling in terms of what could come around the corner. But if you look at the fundamentals here, they are strong for tech. Balance sheets are strong. And again, it goes into a once in a 40-year type of cycle in terms of spending for AI. Look, there's going to be losers in this. Look at Intel. If that was obviously a disaster and some others. But in terms of quality tech, big cap tech, in terms of software semis, those are names you own here. And you don't sell them despite, obviously, a lot of nerves that are going to be going on across the globe today.
It's almost Shakespearean. The dichotomy between retail investors who are typically buoyant and the cautious, judicious institutional traders. As you navigate through the cacophony of stock discussions, occasional exclamations of "AI is the future" will hit your ears, not unlike hearing a town crier in the medieval square. Often, these pronouncements are followed by a recommendation for Nvidia, a company that arguably sits high on the AI mountain. Peel away the layers of exuberant optimism, and one finds Goldman Sachs, a venerated name in finance, stepping in as the voice of seasoned caution. According to their analysts, industries may be overspending on machine intelligence, seeing little return on that hefty investment. To bring it more explicitly to Nvidia, the concerns raised suggest that the fervent AI advancements might not translate into enduring profitability for Nvidia stockholders. One needs to take cues from the options flow, a superior analytical tool that gives a snapshot of what big block transactions are signaling. Simply put, it filters out the white noise created by individual retail transactions and provides a clear picture of institutional trader actions. And here's the kicker. The net trade sentiment for Nvidia stock has decidedly turned negative. For the uninitiated, during Thursday's trading session, the net trade sentiment of all options premiums plummeted $4.63 million below parity, distinctly veering towards the bearish camp. To put it in context, it's like entering a betting arena and seeing all the high rollers placing chips on red, while the common folk cheer for black. Just a day before that, a staggering $38.8 million below parity was observed, confirming a bearish momentum building up against Nvidia. So why should a retail investor care about these pecuniary paradigms? Let's answer this. Hello everyone and welcome back to Investocracy.
Is any dip that we see in Nvidia still a buying opportunity?
So I think with Nvidia, you have to be patient, and you don't have to go all in right here, right now. When momentum starts to roll both on the upside as well as on the downside, it tends to continue a little bit. So for investors, we think you should get comfortable with some of the volatility. If you don't like seeing the stock down 6 to 7% on a daily basis, it shouldn't be something that you should put in your portfolio. However, the long-term aspect, and again, depending upon your time frame, it could be a great opportunity simply because AI has very long legs, especially as so many companies are investing in what the potential could be with AI.
The so-called smart money are systematically placing bearish bets. There's likely a substantive rationale behind it. Focusing on the Thursday session alone, an inspection of two crucial options portrays a bleak picture for Nvidia within the month. The significant volume exceeding the open interest suggests the opening of new positions, indicative of a severe downward sentiment. One projection even speculates a drop to a jaw-dropping $106. And then there's the particularly enticing proposition of the 17 Jan 2025 $90 put option. It's almost a contrarian's dream, the ultimate setup for anyone brave enough to confront the mainstream market acclaim. While the market pundits sing praises to AI, lurking around like opportunistic skeptics, professional traders are stealthily buying puts and discarding calls. One might argue that this bears a resemblance to a certain adage about keeping one's friends close and one's enemies closer. After all, the same traders who championed AI's potential might just be the ones protecting themselves against its overinflated valuations. It's Wall Street in a nutshell, contradiction wrapped in foresight. Accompanying this intriguing narrative are cold, hard numbers. Consider the following. In the last month, Nvidia has seen an overall drop of X%, conflicting with an AI-centric stock market that saw an average rise of Y%. It suggests that Nvidia's predicament isn't an isolated incident, but rather a sector-specific cautionary tale. Additionally, analysts' earnings projections reflect a possible deceleration. Contrasting that, social media buzz remains high, bolstered by high-profile endorsements and speculative optimism around AI's future. For instance, popular tweets from influential market voices echo mixed sentiments, with one prominent tweet stating, "Nvidia's valuation looks inflated. $90 puts may be the insurance we need." The divergence in perspectives only adds to the investment intrigue, generating a ripe debate environment for ardent investors and cautious cynics alike. So what does this mean for Nvidia stock investors? Let's find out. But first, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
In today's broad market sell-off, tech stocks were among the worst performers, and Nvidia may be to blame. The information report over the weekend, Nvidia's state-of-the-art Blackwell AI chip is facing delays. The report rattled tech names at the open, but the tech-heavy NASDAQ did manage to pare some of those earlier losses, closing down more than 3%. With me now to talk about all this is Dan Gallagher, columnist for the Wall Street Journal's Heard on the Street. Dan, it is great to see you. I kind of want to actually start bigger picture, Dan, because you've been following the markets for a long time, and just get your take on kind of action we've seen in big tech, because got hammered today, but it wasn't just today, Dan. I mean, when we made our way through this earnings season, it was just interesting the way investors seem to have some new questions about big tech and that mega trend of AI, Dan. They seem to be saying it's great that folks are testing AI and experimenting with it, but where's the usage? Where's the monetization? Where are the returns, Dan?
Yeah, I think that really summed up this earnings season really well. And it was kind of unsurprising if you think about it, because it was going to always take a while for generative AI to build up into some kind of business if it builds up. But all the investment for it has to come before that. And this is a lot of investment, billions and billions of dollars into buying these GPUs, building these new data centers. And so I think there was always going to be these periods where the spending was going to really outweigh any kind of business or revenue story. We definitely saw that in this one. All four, I'll call them the four kind of AI giants, and that's Microsoft, Alphabet, Amazon, and Meta, had that was the theme of all their reports. And three of those four companies, their stocks pretty much have fallen and stayed down since they reported. Meta's the only one that's up.
As we stand at this financial crossroads, the decision to invest in Nvidia boils down to a meticulous analysis of both prevailing market sentiments and future forecasts. For the contrarians, the bearish bets of institutional investors can appear to be an enticing opportunity, an insurance policy for an overzealous market that's galloping ahead, potentially towards a precipice. The current state of Nvidia, with its robust product lineup but marred by over-enthusiastic AI expenditures, presents a complex but intriguing investment puzzle. Presently, Nvidia holds a staggered position amid AI euphoria and financial skepticism. According to recent forecasts, despite short-term volatility, long-term projections remain bullish, with Nvidia expected to bounce back as technology matures and real-world applications solidify its revenue streams. Yet, traders should keep a watchful eye on bearish options activity, acknowledging the smart money's cautious stance as a critical barometer of near-term movements. To conclude, the big question remains: will the smart money's bearish gamble pay off, or will the retail investors bask in their unwavering optimism? Where do you stand in this high-stakes game? Share your thoughts, and let this discussion evolve into wisdom-laden discourse amid the ever-thriving sea of stock market vicissitudes. Remember, while Wall Street may be an arena of wealth and wagers, it's also an intricate confluence of data and intuition. Choose wisely. Finally, if you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there.